Welcome everyone to the third Thursday meetup of the West Orlando WordPress Meetup Group. I'm Rob Watson, a co-organizer and host, along with Brian Walton and Alan Fueling. Our presenter tonight is Cris Carillo, either one. Cris will give us an overview of current payment processing systems for e-commerce businesses. He'll also be discussing various payment options and pricing for all types of businesses with an emphasis on e-commerce. Cris transitioned from the world of international sports advertising to online payment processing in 2008. Co-founding Allied Payments 5 years ago, he has worked as both a sales team member and more recently managing the day-to-day marketing operations. Focused on e-commerce, Allied Payments has become one of the largest payment processors in the high-risk industry. At this point, I'd like to invite everyone to mute their microphones for the presentation. And Cris, thank you for being our presenter this evening. The time is now yours.
Thank you very much, Rob, and thank you everyone for coming today. As Rob alluded to, my name is Cris Carillo. I am a partner here at Allied Payments, an online payment processing company, where we've worked with multiple merchants throughout the United States and merchants and banks around the world. I will start the presentation right now. All right, so we'll get started here. So the main online payment methods that are available today include credit cards, debit cards. As many of you well know, Visa, the largest of the companies, has well over 1 billion cards in circulation today, and they handle nearly 2,000 transactions a second. The next largest type of payment service are the payment service providers and e-wallets. These are your Stripes, your PayPals. PayPal being the largest of them. They have over 250 million users and roughly 20 million merchants today. And for some alternative type of payment systems, we have electronic checks and ACH along with cryptocurrency. Now, checks have become more popular in recent years as the payment service providers and Visa, MasterCard type card companies have increased their guidelines, making it more difficult for merchants. And that has also opened the door for cryptocurrency, which has continually been growing as one of the larger types of payment systems. So right here, I figured we'd give you just a brief overview of what exactly happens during a credit card transaction. This is pretty much the same though, whether it is done with a merchant account or through a payment service provider. Usually there's between 5 to 6 organizations. Credit and debit cards will be handled roughly the same way, same as a PSP or merchant account. The only difference with a payment service provider, those PayPals and Stripes, is that they normally just pass through the information from the merchant location to the merchant acquiring bank. And those are the guys that actually work with Visa, MasterCard, Discover, and American Express. So once a customer enters their information into the merchant's shopping cart, the web browser will catch that info and package it in a SSL format and secure format, encrypted format, and send that off to the payment gateway, along with the information about the transaction, the cost, the merchant's location, so that that information will be gathered by the payment gateway and passed along in another secure financial messaging format to the merchant acquiring bank. Now, the merchant acquiring bank will take this package from the gateway and enter it through their system into the card association. Now, these are the networks that are owned and run by Visa and MasterCard. Discover and American Express have their own separate networks, and then we're also starting to see newer companies or larger companies from outside the United States, specifically JCB, which is the Japanese Credit Bureau, along with China UnionPay. And if you ever go to McDonald's, you'll start seeing all these logos now on the drive-through window. These are the different companies, and a lot of those companies are using either the Discover or the MasterCard networks in order to access the credit and debit card users in the United States. So once that information is in the card association, they will decipher that file, figure out who the card issuing bank is. This is why when you see a Visa card, it usually starts with a 4, or always start with a 4. MasterCards will always start with a 5. And you'll see your Discover cards start with a 6. This is where they start to determine what banks, and those first 4 numbers will determine the banks. That information sent off to the banks. At the bank there, the card company will verify the cardholder's information, run fraud and security checks, verify that they have enough money for the authorization request that came back from the merchant location. And then at that point, we'll render either an approval or decline on that authorization. And at that point, that response will be sent back to the payment gateway and show up at the merchant location. And as you all know, that these transactions take 1, 2, maybe 3 seconds to go through. A little longer now with those EMV chips, but it is a ridiculously fast process that all this can happen in little to no time. So go over quickly here, basically what a merchant account is. Merchant account is going to be set up by your Bank of Americas, your Vantifs, your Global Pays. A lot of the big companies are the ones that are working directly with those card associations. These accounts are set up in the merchant's name. So this is your dedicated account. This is why merchants are required to go through an application process, because they do assume the risk on the account and all the liabilities of the account. So the bank account will provide access to those networks of the Visa, MasterCards. It will also require that a payment gateway be used. Many of these companies do not provide their own gateway. Sometimes they do. One of the big ones being Authorize.net can integrate into all these different companies. There are other available options out there. The companies that do provide the merchant accounts will also require merchants to become PCI compliant. Now, the PCI compliance has become a big push in the last 5-6 years or so. This is why we've all gotten those new cards in the mail with those little chips on it. Though that does prevent fraud from happening in person, this has shifted almost all fraud to online. So it's very important for merchants to pay attention to what's going on with their transactions. Be really vigilant on making sure that the sales are coming through, that nothing looks suspicious, because at the end of the day, it's going to be hard for them to dispute, and you can be on the line for a lot of losses there. And we do see this happen a lot. And the fee structure, though, from the merchant accounts, though, can be a little more confusing than, say, a PayPal. This is because most of the fees are passed through directly from the card associations to the merchant. And I'll talk a little bit later why this is actually better than just having everything wrapped into one. So next we have the payment service providers. Now these guys, what they do is they use a centralized merchant account, and from there they allow access to all their customers, their merchants. So what that means is that they can set up one gigantic account, and once they license access to it, to the different merchants, they can just quickly put them in. That's why when you go to apply for a PayPal account or a Stripe account, you can get set up in next to no time, just with maybe an ID, just verifying your social security number and your address, because they are taking the liability in their master account that they have there. Now, this does create certain issues though, because they have to govern and view those accounts, and they can decide what merchants they want to deal with. And this does create problems. And as we've seen, even with the Visa, MasterCards, they've gotten more and more difficult to as they decide what types of industries they want to work with and who they don't want to. And to be honest, they don't really want to take any risk on their accounts, because there's too much money to be made dealing with a pizza shop down the street than there is to possibly dealing with a CBD store or something like that. They just don't want to bother with it. And this is why it's becoming more difficult for merchants that are operating kind of with not necessarily a gray area, but kind of unconventional type businesses. So as I said, though, it's a quick way to get set up. Their software is super easy to integrate into your website and to get up and running with the shopping carts there. The fee structure is super simple. Usually it's just around 3% and probably about 30 cents a transaction that you're paying. And they also take care of all the PCI compliance for their merchants, whereas with the merchant account, that falls on the merchant. So it's it's easier it's a little bit more, or I should say a little less work to have a PSP, a PayPal Stripe account. And then we're going to go into some of the alternative types of methods. So we have e-checks. Now, e-checks, it's very similar to like a debit card where you're drawing the money directly from the customer's checking account. The new technologies that have come out, we've had a lot of changes ever since September 11th there with the financial banking systems, and that has actually just recently made the speed at which checks are able to be processed that much faster. So right now, one of the big things is we have the electronic checks, which you're able to create a virtual check using a signature online, and that way you can provide easy funding through the NACHA, which is the major banking network that's tied into the Federal Reserve. Most e-check processors today can integrate into the largest payment gateway, so it's not a real issue to add it in. The fees, they're normally much cheaper than any type of credit card type system, so that's one benefit. And we also have now the Check 21, which is a new system that takes advantage of the remote capture technology. That's the system that you can use now on your banking apps on your phone, and you can deposit a check from your home just by taking a picture. It's the same idea where they print a check and they can deposit. We're looking at now even same day funding on those transactions. So it's really something to consider if merchants don't want to deal with the credit cards, or they just want to have another option for payments. And then we have the cryptocurrencies, which we're all very familiar with, the Bitcoins and the Ripples and such. Right now, there's about 2,000 different currencies floating around the world. As we know, a lot of them are based on the idea with the blockchain technology is based on security and anonymity. And it really is a global currency where we don't have to exchange money between countries, that we can just pay with the same currency, which is a great idea and great for companies that are working on a foreign exchange basis. So we don't deal a lot with crypto at this time. Most of our clients still are dealing with credit card, and we're starting to see more and more move over to the e-checks. That's kind of been where we have, so we don't have a lot of experience ourselves per se, but the payments though with the crypto are made without a centralized authority to monitor the transactions, unlike your Visa and MasterCard. So you can do a lot more, sell a lot more, or take payments for much different products though than that you would be under scrutiny from the credit card companies. The blockchain technology adds a whole nother level to reduce fraud, which is a huge problem with the credit card companies. But with the blockchain, because of with that blockchain technology, though, you're really unable to fraudulently push a transaction through without having the proper documentation there. And as I said earlier, the minimal foreign transaction fees is a really good means for companies that are doing international transactions to avoid paying those forex fees, though you do have to deal with the volatility of the different cryptos. So go over just quickly some of the advantages and disadvantages of using each of these. So if you do go with a credit or debit card solution, many times it's great because you can work with a local company. Those are those ISOs, independent sales organizations. Many times your banks, if you're working with a smaller bank, they might turn you on to a local guy. Or if you are working with a Bank of America, they might have it in-house. I would suggest going with a local guy because a lot of times you can get better rates and much better service though than dealing with a larger company. The fees, even though there are set fees with a credit card account there, you are going to have your monthly fees. The overall cost of the account is much less than using a payment service provider, PayPal or Stripe. And as I said, they have more flexibility because you are dealing directly with the bank. They are seeing what your business is all about. And then that way you can possibly sell different products that you wouldn't really be able to do if you had a PayPal or Stripe account. Now, as I said, though, even though we do have fixed fees, some people do look at that as a disadvantage. And I would say with with startup companies, you probably don't want to take on those fixed fees right off the bat. So you might want to consider something else. But for established companies, those fixed fees might not be a disadvantage. Also, it takes longer to set up an account because you do have to go through a background check. They are going to do a financial check on you because they are technically lending you money for the course of the month there. And then at the end of the month, they will draw their fees from your account. They want to make sure that they can get, the bank will be paid all those Visa and MasterCard fees and all the fees that go to the customer's bank. They want to be able to pull that out and know that they're not going to be left paying. And when you do have your own account, though, you will primarily have your own gateway, which will require you to deal with whether it's updating the PCI compliance on it or just the regular maintenance of another program on your site. So now we go into the payment service providers. And as I said, it's a very easy process, though, to get set up. That's one of the advantages of getting going with those. You can start selling immediately. They're easy, super easy to install on your site. And the pricing is very easy, usually right, like I said, around that 3% mark. So you can almost always know exactly what you're going to pay on every transaction. Now, how I view some of the disadvantages, there are higher fees. Now, with all those banking changes that we had back in 2001, there were substantial changes to the debit card systems. And this is why we see checking accounts today that all have these minimal fees and this, that, and the other thing, stuff that we never had before. And it's because during those banking changes in 2001, they took away the bank's ability to make money on debit transactions. So that's where they're recouping it now by having checking accounts with all these requirements. So these fees, though, have the debit card fees, though, are significantly smaller. So when you are using a payment service provider, you are paying a huge premium for debit transactions. And as we know today, most transactions people are doing are debit. So you can cut off a big part of your credit card, debit card fees just by using a regular merchant account versus a payment service provider. Now, another issue, and I think this was going to speak to some of the people here, the subscription limitations. When you do sign up a customer for a subscription on any of these programs, PayPal, Stripe, or even some of these other companies that cater to a certain industry, such as travel, they will allow you to set up subscriptions, but what they do is they hold on to the customer information. So if at any time you ever wanted to move to a lower cost provider, they're not technically your customers. They're the customers of the PayPal or Stripes. And for that reason, you are pretty much stuck with these companies, and they know that. And that's one of the reasons that they've thrived is by holding customers basically hostage. So this is something really to think about if you are going to be starting a business that does rely on any type of renewals, recurring billing. Really think about this stuff before you get started. Is it really worth it? And the customer service side, you're not going to be able to call someone like the local guy. It's something where you're going to have to deal with a large corporation. And again, the stringent guidelines. You don't know. Maybe next week they're going to change their policies, and your industry might be the one that's let go. They can freeze your account. They will refund customers, however it is that they see fit in order to keep their business going. They don't mind losing a few customers, a few merchants, getting rid of them because there's more coming through. So those are some of the reasons why payment service providers, they can be good, but at the same time, they can also be troublesome for established or growing merchants. Now, e-checks, again, the lower fees, ideal for the recurring billing. The ability for customers to whether go back and we call them chargeback on previous transactions is much harder when they're using e-check than it is for credit card. Gateways, most of these gateways most of the e-check programs are able to integrate into the gateways. So that is not an issue if you're setting up an alternative, secondary, third type of payment system within your gateway. And the settlement times, as I said, we're down to same day approvals. We can verify transactions. We can verify accounts the same, almost instantaneously, to make sure that that account number is actually live, that there's something there. Though at this moment, we can't see how much money is in the account. We can see, though, that that account is there, and you can approve a transaction and give your customers access to whatever it is that you're selling, knowing that at least they gave you the right information. Now, we're working on it. It should be hopefully in the next few years, though, that they will be able to see exactly if that transaction will clear, similar to how we can see if a credit or debit card will clear at that moment. And as I said, some of the disadvantages, and many of you guys might know just by being in the industry, that it's going to be difficult for customers to adopt this new idea. A lot of customers don't want to pay with checking accounts, so it takes a little bit of time to get them used to it. There are certain industries now, such as CBD, which is not something that can be sold with credit card or debit card, but e-check works as long as it's legal in this state. So that's why we're seeing a lot of the CBD distributors are adopting e-check, and their customers are not having an issue paying for that. And again, as I said, we're not able to positively authorize transactions, though we can verify. And finally, the cryptocurrencies. So most times cryptocurrencies have lower fees than credit cards. It will depend on the industry, though. If it is will depend on the risk of the industry. So in some avenues, I've seen upwards of 7% to process a crypto transaction. Other times it's below 1%. So it just depends on what you're selling and what processor you're using. As we stated, the security and privacy are much better than what you'll find with the credit card transaction. And the settlements are much quicker, as you'll see that they move right into your account there. Though the time to move that money into actual currency could take a little longer. It is a quick settlement, and that money will be right in your account. And though it is growing, it's not a huge, there isn't a huge demand for crypto in most general e-commerce industries. Again, when you go to more niche areas, you will see that it's more prevalent. Another issue is the volatility and ultimately the government regulations. What are they going to do? How are they viewing the profits made from Bitcoin or other cryptocurrencies? So when you are looking for a merchant account, there are a few things to think about here. The type of payment schedule or fee schedule that you're going to be working with. Now, one of the most commonly used, and the one that I prefer to set merchants up on, is called the Interchange Plus. And what this means is that every transaction that the merchant runs will have a set fee placed on top of the interchange cost of the card. So what this means is interchange is the true cost of a credit card. So every Chase, Citi, Capital One card will have different rates depending on the fees, or excuse me, depending on the rewards attached to it. And being like when you look at a Citi card that gives you 2% cash back, well, that money ultimately is coming out of the merchant's pocket. So this is where the true cost of that card, though, is going to be over 2%. With the Interchange Plus, that merchant's getting that 2% fee plus whatever their agreed upon interchange transaction fee will be. Now, this guarantees, though, that merchants are always paying the same fee on every transaction, regardless of what the card is actually coming through at. And as I said earlier, the debit card transaction fees are substantially lower. So when you are running a card with a very low fee and then you're tacking on a very minimal fee on top of that, your debit card transactions can be very, very cheap. Many merchants are paying, I would say, in the 35 to 40 cent transaction or total cost on a $100 debit card fee when they're using an Interchange Plus type setup. Now, one of the older type systems that was used many years, especially when credit cards first came out, was the tiered. And this basically established multiple different pricing levels where transactions would be would qualify for. So you would have usually a low teaser rate right at the beginning, and then followed by 2, 3, upwards of 5 other types of tiers below that. And your credit card, where it would come through, it would qualify for what would be its lowest tier. Sometimes the next lowest tier after the first teaser could be 3.5%. Now all of a sudden you're paying a huge premium on these transactions just because you're using a tier. Whereas the Interchange Plus that we've previously spoken about, you're still going to be paying just a flat fee no matter whatever the card cost is. And finally, we have the membership or the flat fee type systems. This has become popular now. There's a lot of companies that are offering, whether it's $50, $100, $200 a month, and you can run upwards of 1,000 transactions for a set fee. It is a very simple type program. It seems very upfront, but in reality, when merchants do get into that system, the first month or two, it's pretty cheap, and then all of a sudden they realize that these processors are coming back and they can recapture overage fees from the previous months. And this happens when they can guarantee you, say it's below a 2% rate, and all of a sudden you're running cards that are well over 2%. Well, the processor is not going to be paying for that. You are, as the merchant. So they're going to come back and recapture those fees. And a lot of times it's not just the difference of what they lost. They will have it at a substantially higher rate, and they will pull those fees back. We had a nail salon that was running, I think she was doing about $500–600 a month in fees. Saw this, decided to jump over, and before you know it, after about 3–4 months, her fees were well over $1,000 that she was paying because these captures coming back in and pulling the overages out at such a high rate that it was absolutely ridiculous. And then we have the flat fees, which are your PSPs that will charge you that flat fee no matter what you're running through there. So they make up a lot of money on those debit card transactions, but they do lose money on the American Express and the higher rewards cards. But those losses are offset substantially by the profits they make on the debit. That's how your Squares and your Stripes, they all work, because they have minimal losses on one side, but they make it up with those high margins on their debit. So what to look for? If I was going to be looking for a merchant account, first thing I'd be checking out are the various fees on the pricing chart there. So see which are your variable. Those would be your transaction fees. A lot of those are negotiable. You also are going to have your fixed fees. Now you have to watch out because some guys will charge you, or might not even charge you for a monthly fee, but then they'll add those costs into another part of your agreement. So you have to watch all the fees that are in there. Pretty much all merchant accounts are going to have a monthly fee. If they don't, they're either going to wrap it into a biannual fee or an annual fee, something along those lines. So it's something to pay attention to when you are applying for a merchant account. Then you're going to want to look at the functionality. What are you using it for? If you're doing it just e-commerce, it's pretty straightforward. If you are using it for e-commerce and retail, there are ways you can set up your account so you can either run all your retail transactions through the gateway and have all your transactions then managed through your payment gateway, which I would say is a preferred way because you can then view all your customer information. You can store into a CRM much easier that way than if you're running it with a credit card machine on the countertop, and then you also have your e-commerce sales coming in from the other side. And then what do you need? If you are doing a website, make sure that you have the proper, if you are going to be using like a Shopify or a BigCommerce, make sure that you have the right plugins for your site. If you're primarily using a WordPress, that shouldn't be too hard to find. But you're also going to want to know where are your transactions coming from, how much are they worth, and who your customers are. And that way you can better prepare them with a merchant account that might not charge you as high of a foreign transaction fee, or might limit the payment gateway fees. You can negotiate those down a little bit if you are going to have a lot of transactions coming through the payment gateway, because that normally is set up as a separate transaction. And so some ideas though, when you are shopping around for a payment gateway, Of course, how easy is it to integrate into your shopping cart? Most of the major payment gateways will have plugins for the shopping carts that are commonly used. Search on WordPress.com, you can see that there's tons of different WooCommerce type solutions out there. You're also going to want to make sure that your gateway is PCI compliant. If you are not running with anything that's non-compliant, you are opening yourself up to legal liabilities if there were to be some type of fraud or theft arising from your site, from transactions on your site. So you can easily just check it online just to make sure. Most gateways are PCI compliant, so I wouldn't be too worried about that, but it's just something just to make sure. How the checkouts work. You want to make sure that they have efficient checkouts, so you're probably not requiring customers to sign up or register or confirm an email address in order to complete the sale. That's just gonna many times push people away. You're gonna have abandoned checkouts, and it's just almost counterintuitive there. You want to make it as easy as possible. Have information that populates, whether it's the billing address and the shipping address, just to limit the amount of work that customers have to do when they get in there. Of course, when your sites are mobile responsive, you want to make sure that your gateway is also. And another thing to think about is the functions. This goes back to what are you going to be using your merchant account for. Many times the payment gateways will offer a virtual terminal. What that is, it's just like having a credit card terminal, but it's on your screen there. So if you were to get a phone order in, you could just open up your payment gateway and just punch in all of the customer information and run the card right there without needing a physical terminal. There's also swipers, these little USB swipers that you can just plug into your computer, and it will keep the payment gateway running in the background. Customer comes into the shop, they can just easily swipe it there. You can capture their information and run that transaction through your payment gateway, capturing all the customer information and keeping it all in a organized format. So in the payment gateway, making your reporting and your transaction management much easier. And then also the last thing, you just want to make sure that you can have some decent customer service there. So if it is 11 p.m. on a Saturday night, or you have an issue, you can call them. You're going to get through. They're not going to be closed or charge you excess fees for after-hour service. And just some basic payment processing tips there. If you are starting a company, even though I do sell merchant accounts, I would say use PayPal. I mean, it's the best way to keep your costs down. And if you are doing an e-commerce site and just selling one-offs products, you can always switch it into a merchant account later on as you grow, once you get the proof of concept in there. If you are going to go to a merchant account, make sure you're using an Interchange Plus pricing format there. That way you can easily compare different vendors to see who's going to give you the best rates. Make sure, though, that you're also reading the fine print. A lot of times we have merchants that after a year or so, they want to close up shop. In my industry, for one reason or another, a lot of our merchants end up in 3-year agreements, and even 2 years in, they still want to hit them with cancellation fees. So it is something to know, to think about when you are signing the contract. You also want to make sure that you know what the PCI compliance fees are. A lot of times merchants, the merchant acquiring banks there, the ones that are actually issuing the accounts to the merchants, that they will require merchants to take an annual PCI compliance test. And if you don't do it, they might bill you $5-10 a month for not being compliant, even though you're perfectly fine. You just haven't done that test. So just know what you have to do. And again, if you are getting into one of those flat fee accounts, just know what types of, if there are going to be any type of recapture or anything along those lines that can end up costing you a lot in the future. And as we spoke about earlier, the subscriptions, this might be the one time I would seriously consider as a startup not starting a relationship with a PSP or anything like a PayPal, but instead of going directly to a merchant account where you have full control of your customers. And if you do ever decide that you want to change vendors, payment processors, you can move to another company and take those files with you and start processing those rebills through another location. And one of the most important things for e-commerce is going to be your fraud management. Now, using AVS or the CVV numbers might not be the end-all be-all, the best way to handle your fraud management. You want a payment gateway, or you want to be able to set up parameters within the gateway that will limit the velocity of transactions. So if you do have someone that's coming in from a certain IP address and they've tried twice now to run a card, you want to block them out for 5-10 minutes. Okay, and that way then they're going to try that third time, get frustrated, and leave. I would always check AVS, make sure that that matches, and the CVV always require that though. Many times with our merchants, I tell them, if you have any questions, just call your customer and make sure that they are the person, that they're aware of what's going on. I mean, we have people that have been sending packages from Wisconsin to Miami, and I look at the address where it's going to, and it's a freight forwarder. And I tell them, you know, this is why it's fraudulent, because you're not even sending it to the person. The person lives in Wisconsin, you're sending it to Miami, and it's a freight forwarder's address. It's leaving the country. And it's little things like that, though. Just take the extra minute, especially on higher ticket items. Just make sure that who you're selling it to is who they are. And if you have any questions, though, it's easier just to void the transaction, contact the customer and say, hey, listen, you know, this transaction seemed a little suspicious and I really don't feel comfortable doing it. Can we try it again in a different format? And that way, though, it would really help you to prevent your losses. So that pretty much concludes my presentation there on the payment processing. If anyone here has any questions concerning anything with payments, whether it's the gateway or questions on a merchant account, if you have an off company, you want to just question something on it, I'd be happy to take a look at it. This is my contact information here. And well, I appreciate your time. Thank you very much.
Thanks, Chris.